We're a long-term investor in what is inherently a cyclical business. And therefore, really for us, it's make sure we do the right things consistently through the cycle. That's about the property portfolio, that's about maintaining the strength of our balance sheet, it's about investing in our people and our relationships. And look, I'm really pleased that in what was a really challenging year in the capital markets, we raised £4.5 billion from our debt investors. Really a real sign of strength and a real sign that they believe in our long-term strategy. So I've got to say, who knows what 2023 will bring, but I feel we are in a very good position to kind of sit here with confidence and deal with what it throws at us. Property valuations through the cycle are a function of lots of different things. Right now, they're being very impacted by inflation, by interest rates. But for us, over time, we think the key determinant is cash flow, both the current cash flow, but the way that cash flow might grow. Within the industrial and logistics sector, we benefit from our occupiers really being pushed by a few big long-term structural trends: digitalization, sustainability, the supply chain. So when you take together our very high quality portfolio that's in the right locations, you take that occupier base and occupier demand that we think will grow, we think we have the potential to take that really strong current cash flow yield and grow it to deliver some very, very good, attractive total returns over time. In terms of capital investment, I think it's important to remember that we're a long-term investor, so really to maintain a balanced approach through the cycle. Now, right now, interest rates have gone up, cost of capital has gone up, so inevitably that means our hurdle rates for new investments have ticked up a bit. But the nice thing is we've got some great opportunities within our business already. We've invested really well in land over the past few years. With our occupier demand that I've talked about already, that means that we can build new assets to appeal to that occupier and deliver some interesting, really good returns and great new buildings on that land. And in terms of new opportunities, there's always some interesting stuff that will come along. With a balance sheet as strong as ours, I'm sure we'll be able to find some interesting things to deploy new capital into in 2023. In terms of financial requirements going forward, we're in a happy position of not having any material refinancings until 2025, partly because we were so active last year. We've got lots of liquidity in the form of our existing bank facilities, so that gives us lots of capacity to invest into new projects and also our existing land bank as we go through the year. Looking at the cost of debt, well, new debt is more expensive than the old, but the nice thing is we've got most of our debt in fixed rates and our average debt maturity is 9 years. So whilst the cost of debt will tick up, it won't do so materially through 23. There's no good or right answer to what the right level of leverage should be for our business. It's really a function of lots of things, some which are not in our control, things like the property cycle, but some that are in our control, like our investment plans. What we've tried to do over the last few years and will continue to do from here is to maintain a strong and a liquid balance sheet. What that means, we gives us lots of headroom to our financial covenants, and it also means that we've got the liquidity to invest into new projects in our existing portfolio as and when the opportunities arise. So SEGRO is a much bigger business, even in the 6 years since I joined. And I think it's really important to keep investing not just in the property portfolio, but in our people and the processes and the systems as well to keep us as efficient as we can be. So I'm really excited about some of our plans behind the scenes in 2023 and into 24 that will really invest and create new ways of doing things, and means that our people will spend their time in the areas that are most effective, be it new initiatives and be it new projects that will allow us to kind of keep ahead of the curve.